MarketStrategy.com.
Hi, this is Chris. Looking at the September 15th trading session, I have the economic calendar open in front of you, and it's a very short day when it comes to announcements. Japan's closed, and really nothing else going on until we get to the United States. The industrial production numbers month over month anticipated to be 0.3%. That, of course, will have a little bit of an effect probably on the stock markets more than anything else, but really that's all we're paying attention to. So better than anticipated, good for U.S. stock markets. Worse than anticipated, bad for U.S. stock markets. With that being said, let's take a look at some charts. Looking at the British pound versus the U.S. dollar, you can see that we have a relatively strong move here during the session on Friday. We formed a hammer, but really what I would point out to you is the weekly time frame. The weekly time frame has formed a massive hammer. It should be stated that from here to here and then back, we bounced off of the 50% Fibonacci retracement. In other words, a bounce in the pound's probably going to come. A move above 163 we think gets this market looking for 1.65 or so. As far as selling is concerned, we think it's a little overdone at this point, so we're looking for buying opportunities. The Scottish referendum is Thursday, so perhaps the market's trying to correct some of the oversold conditions between now and then. Over in the euro dollar, exact same situation. 130 looks like it's resistive, but when you look at the weekly chart, all of a sudden a completely different picture emerges. 128-ish has held so far. We formed a hammer. It's probably time to bounce. Above 130, we go to 133. That's a longer term call, but in the daily time frame, you can still see clearly above 130. 131 and a half is probably targeted, so therefore buying calls would be the way to go. Although longer term bearish of the euro right now, we feel that selling it just can't happen. Looking at the S&P 500, we did fall a bit during the session, but really a lot of consolidation here. You could even make the case for a flag. So that being the case, we think that the markets are looking for an excuse to go higher. We're a little exhausted at the moment. Some type of supportive candle in this general region. We are buyers of calls. A move above 2010, we are definitely buyers of calls because that signals that we're going to have our next leg higher. The oil markets continue to just meander around this area. Quite frankly, we feel that any rally here is probably going to be a nice selling opportunity. 96 being a massive barrier to get above, which we don't think will happen. So if we do go higher, we're going to look for resistive candles, shooting stars, something along like that, along the lines of the daily time frame, maybe 4-hour time frame. Probably not a whole lot of downside, so a bounce first is what we're anticipating. We're going to sit on the sidelines. We're going to wait for an opportunity to buy puts at higher levels. And with that, I've taken a look at the Monday, September 15th trading session.